Welcome back, guys, to Crypto Insider. It's been a while since my last video. Sorry for being absent. The reason is simple. I think there was nothing new for me to tell you. But obviously, let's go over what I said and what actually happened. If you go through my last videos, basically all the way since December, since my first video, I've been warning for this massive correction in any coin, really. And that was also the case. If you don't believe me, you can just look on my YouTube channel and you will find those videos. Now you would say, like, well, you only make bearish videos and this and that. Well, I make bearish videos because the trend is heading towards bearish territory. Now we've been, since that first video, we've been down on most altcoins, maybe 40, 50, maybe more percentage. Now we're currently up in a little bounce. So let's go over what's happening right now. And I want to add to that, I want to do a video every week. And I also want to start a trading course so you guys can also understand, how to read price action and how to become a profitable trader without spending too much time checking charts, being stressed about your positions, etc., etc. I think if you, let's say, like most people have, normal 9-to-5 job, you want to be able to have a trading strategy that gives you really great entries and great exits, and in between you should be able to sleep well, to not care about what happens in the market, because you have the safety of a good entry and the knowledge and the analytical capability to really understand what's going on. So for now, I will tell you what's going on. For the coming weeks, I will do a video every week, and so we can look at why things moving the way they are. So obviously, first we have this geopolitical situation, which is obviously very bad. We always promote peace and love, and war is never a solution for anything. So I hope, everyone hopes, there will be peace soon, including me. This geopolitical situation obviously is very bad for the markets. It's not good for risk-on assets. We've seen that gold has been going up. Gold is a safe haven asset, as a risk-off asset. And we've seen commodities going up, like oil, gas, and many other raw materials used in industry. So the main pain to the market is in the European stock market. So here we have the European index of the 50 biggest companies in Europe. And we see we're on the monthly time frame here. This is the dotcom bubble. And we have here the 2008 crash. And what we're looking at right now is potentially another crash like these two here. If it's going to be as much as we had before, we cannot tell. But what we can tell is that this 3800 zone here is a crucial resistance and support area. So if we lose the 3700 level, then we are really in deep shit for European stock market, which makes us to likely retest this upwards sloping trend line, and either we get a rejection upwards or we break it and we keep going down. We're not there yet, and it's still a long way to this trend line. It doesn't look like much, but it's still 15%, which is for the stock market, that's a lot. So we'll have to see how that goes, but I definitely think we could break this level and start to trend lower. We could also find support here on this moving average. That's the 800, if I'm not mistaken. So that's something to take into account. Especially the European stock markets are very bearish. Now let's go over to the USA. Here we have the Wyckoff distribution on the S&P 500. Wyckoff distribution, long story short, is basically a scheme where a market maker tries to sell their inventory, whether that's stocks or gold or cryptocurrencies, for the highest possible price. So they keep spiking the highs before taking it down. And basically what they're doing is distributing their inventory before putting prices down and before they start buying again. So, well, this played out really well, really well. I posted this scheme when we were still above the bull market support band. There's this band here, and yeah, this played out. You know, we had the sign of weakness here. We came back up in the psychological low, basically into the bull market support band, exactly the same as we did with Bitcoin, and then we got rejected out of it. Right? Go look at my last Bitcoin videos. You will find that same scenario happening for Bitcoin. And it looks right now that we're forming another psychological low before we hit phase E. And phase E is basically the phase where the stock market is going to do that, right? And that could be, that's pretty much aligned here with the Federal Reserve meeting that is going to be on the 18th of March, if I'm correct, by my head. It's mid-March. I think it's 18th, could be slightly off, but doesn't matter. Keep your eyes on that meeting. It will likely be a 25 base point hike on interest rates, which is obviously very bad for the stock market. If you don't understand why this is bad for the stock market, go back to my first video where I explain everything about interest rates and how this works for the markets. Now, talking about bounces, right? Because you see here, you could be here like you're in a bounce, right? So you could think like, well, this is the bottom, we bounced, you know, or here, this is the bottom, we bounce, right? And this is problematic. Like, to be a bear in a bear market is as difficult to be a bull in a bull market. So I'm personally short on everything, right? Apart from commodities. And so, but if you experience these bounces, and now I'm looking here back at the stock market, the S&P with the dotcom bubble, you can see that we have these, you know, multiple, you know, weak retraces of 10%, 21%, 24% before hitting the bottom here, you know, and it took this bear market in the stock market, it took over 2 years, right? Or almost 2 years. And so to sit on a pile of cash and then seeing, you know, Bitcoin going back up and this going back up, of course, if you swipe the floor, if you swipe the lows and sell again on the swing high, there is fine. But if that's what I'm saying, like, if you are not able to, you know, be in front of the chart all day, this is not your strategy. Your strategy should be selling here around these highs and then buying here around the lows, right? Because then if you have this decent entry, look what happened after. Yeah, you had 4 years to sell, basically. But even if you would have kept here on the 2008 lows, it would have just taken you a few months before you would go back in positive. And you know, right now, look where we are, right? The stock market went down, or the S&P went down on the max point like almost 15%. It's nothing compared to, you know, these moves there, you know. This is the March crash, the Corona dump, 35%, right? So we still have ways to go. And that same counts for Bitcoin. Bitcoin is not a safe haven asset yet. I think we do have lots more interest of the bankers and the institutions. They're showing a lot more interest, but institutions are not a leading indicator for crypto because they're lagging. They're behind. They're buying Bitcoin, you know, more than a decade after it was launched. The guys that you want to follow are the native crypto whales, and the native crypto whales aren't buying just yet. On-chain analysis is now showing that the small investors are buying. So let's look at Bitcoin. So we had this trend down. I think it was somewhere here in December where I started posting my first videos before this first crash there. And well, so basically we had 5 waves down, right? The Elliott wave count 1, 2, 3, 4, 5, right? And we had decent support here on the 2200 EMA on the 8-hour chart, and we have here the 1000, if I say this correctly from the top of my head, or is this the 800? Okay, the 800. So basically price is now stuck in between these two moving averages, and at this chop zone here, it's all about open interest. So it's about like liquidating the longs, which we did here, going into the demand zone, and then going up, liquidating the shorts, going down, liquidating the longs, now going up, liquidating the shorts. Now we had the max pain price for February. That's not relevant anymore. Basically, we have a pivot here. And around the 41K, that's a crucial pivot. So if Bitcoin comes back to 41K and finds a bounce here, we could potentially head towards the supply zone, which is in line with the bull market support band here, and then find a rejection down. This could be a scenario. Or we just keep fluctuating here before the meeting in March of the Federal Reserve and then go down. I do expect Bitcoin to, at some point, drop below the 30K. There's also tons of demand at 30K. There are currently more than 1,000 Bitcoin orders open at the 30K, which before they were much higher at the 35, 34K level. On a bigger picture, and we're talking about a picture here from 2015, we can see that we are somewhat in neutral territory here, but our preferred, good buy zone would be here. We want to see the total market cap coming somewhere, hitting these vector candles there, and potentially show reaction there to the up, right? So how far are we away from that? Well, that's 42% from the first long-term demand zone, and these are your good entries, right? On the RSI, same thing here. We're not there yet. We still have a way to go here, so keep that in mind. So again, here we were you know, so many people, they get so enthusiastic from these types of behavior, and when you see this type of vectors appearing, that's not okay. Yeah, these are short squeezes. These are literally trying to take out everyone's shorts. So this here, Bitcoin, we had Bitcoin trending in the channel, then we lost the channel. That's also where I went short here. I was just waiting for the break of the channel, and we had a beautiful reaction down. I think I closed my short somewhere here. You know, you want to close, right? In these type of environments where price action is choppy, you need to close. So that was a nice 21% trade. For me, it was a 15% one, and a 10x leverage, that's 150%. Here we have we're now right at the pivot, right? This is a 2 weekly trend. The other one was a 1 weekly trend. I make these pivot levels myself based on Fibonacci and on Sigma levels. Too long to explain. They're good. Simply said, they're good. So we are at R1. We tapped R1 here. We didn't make it to R2 like we did here. Basically, we took out all the shorts, and now all the long liquidations, ladies and gentlemen, billions of long liquidations are right here up for grabs for the market maker, right? So I see a lot of people buying altcoins, getting bullish again. Everything is priced into the market. Absolutely not. In my opinion, absolutely not. There's still ways to go for Bitcoin and the total altcoin market. And what we're basically waiting for, what I am waiting for, is the capitulation, because as soon as we see really high volume and a big fat red candle below this level, below the 30K, that's where I will start looking for buys. But as you can see, we have still quite a way to go there, still 32% to get there, and then I want to see it closing below, much lower than where we are right now. Ethereum, very interesting. We are in a rising wedge. We start to hit support here. So basically for Ethereum, if you would consider a short, definitely not consider a long right now. We have support here at the 22,300. We have a rise level 1, retrace a rise level 2, which is basically just the Elliott wave count, right? Like 1, 2, 3, 4, 5. So we could for Bitcoin and Ethereum see one last move up, fill the wedge. Like usually a wedge gets filled till like 75-80%. So potentially for Ethereum, one last time above the 3K, find support here and eventually break support. So, you know, either here would be good entry, or if we really see, you know, support being broken here already, would be also a decent entry. Yeah, that's it. I mean, that's all we can say for now. I mean, we do have this play of this bigger W pattern on most of crypto. But again, like if we look here, where we at here, the S&P, and we go back to how we corrected, because this is great reference material, right? Look, double bottom, V shape. Here's the real double bottom. So in my feeling for crypto, we're kind of here. We're in the middle of the range. We're not at the bottom. We're not at the top. We're in the middle. And I'm waiting for this type of entry to really have a great long-term entry. Now, guys, if you are interested in a trading course, maybe in signals, in things like this, I am going to prepare a 10 video course to completely specifically explain to you how to do investing, how to do crypto in a way that you don't have to worry every day about price action. You know what you're doing, and you have enough knowledge to have diamond hands, because right now I'm diamond hand holding dollars, even though Ethereum went up, Bitcoin went up, all these coins went up. And so if you don't have the knowledge, or if you don't have the strength, this is where knowledge comes in, right? This is where you understand, like, hey, I need to be patient, and your main top entry will come, because all the other people will have bought already before that lowest low will come. It's not really about the lowest low, it's about a year or multiple year solid entry, and those entries will come, and that's where you want to buy everything that's available. All right, guys, let me know if you're interested in this in the comments. Hope you like this video. Send it to your friends, send it to your mom, grandma, your dog, whatever. I need some followers, I need some likes on that button, and I hope I hope to be of value for you all. All right, peace, ciao.